Mr. Shalabh Saxena joins in. The company in our focus today is Spandana Spurti Finance, and Mr. Shalabh Saxena is the MD and CEO of the firm. The microfinance company recently had reported its Q1 numbers as well. It had reported 119 crore rupees consolidated net profit, and that was against a loss of 220 odd crore rupees in the year ago period as well. Mr. Saxena, welcome to you, and thank you so much for taking the time out for this discussion on Business Today TV. I'm Sakshi, and with me is my colleague Shail Bhatnagar as well. The first question that I wanted to understand from you is from the earnings space itself. What really helped you return to profits in Q1? And now will it be sustainable for the rest of the quarters in FY24?
So, good morning, Sakshi and Shail. Thank you for inviting me. Fundamentally, the turnaround from an earnings point of view was the fact, if I turn the clock back in about 4 quarters back last year, Q1 of FY23, we had written off about 701 crore of portfolio, as the result of which we had booked a loss of 220 crores. So that was the first quarter of the last financial year. This loss was essentially outcome of the COVID pain, which we are, there. I am sure you're aware that there has been a change in the management in Spandana. The new management took over about 5 quarters back. So, Q1 of last year was the first quarter where we decided to kind of do what was the right thing to do. We cleaned up the balance sheet, and then we had 3 quarters to kind of recoup. Thankfully, the team supported. There were tailwinds, and we did the right things. As a result of which, we reported a profit, as you said, of 119 crores. To your second question, in terms of is it sustainable or not, yeah, if you go back to our, the last post the Q1, the Q2, Q3, Q4 of last year and Q1 of this year, there has been a consistent and steady increase in all the vectors. Be it not just the outcome, which is the PAT, but also the NIMs and the yields, etc. Most importantly, we've been able to control the quality of the portfolio, and it has improved significantly. So that has led to what we are. And yes, the answer is yes. We hope to continue over the next quarters that are coming in terms of delivering what we had set out to achieve.
Welcome, Mr. Saxena, to Business Today Television. And what we'll do is we'll draw a long-term chart for Spandana Spurti. As Shalabh rightly mentions, there has been a change of management, and the company's gone through some terrible troughs. It's now trading somewhere like 801, 802 rupees. Remember, this was also its offer for sale, its IPO. Somewhere in August of 2019 came into the markets, and it was a very well accepted IPO. The stock actually went up to 1300 levels, and as the COVID pain increased, and as we already know, the volatility in microfinance businesses, Spandana saw some bad days, but it's up and ticking back up again with the new management. Shalabh, focusing on where the growth is coming from, what has been your geographical expansion in the quarter that's gone by, and what are the new areas, new states, new cities that you're looking to add over the next 2 quarters?
So, Shell, it's a very important question to answer because people only tend to look at the outcome and do not really know the story behind the outcome. The last year when we took over, we came out with a document called a Vision 25 document, where we laid out to the market and all the stakeholders what are we planning to do as the new management over the next 3 years, from 22 until 25. We are halfway through. So one of the key things that we had articulated in the document was geographical expansion. Geographical concentration risk, a very big risk in microfinance, and hence it is extremely important that that risk is mitigated through diversifying into various states. So we, as a company and as a management, we identified 7 key states where we had a market share of under 3%, under 0.3%, 0.4%. So we had insignificant market share in those 7 states. The 7 states of Gujarat, Rajasthan, Haryana, UP, Bihar, West Bengal. This is predominantly the northern part, and then one state in the south, which was Tamil Nadu. So as a strategy, what we said was that we are going to grow in these 7 states. These 7 states will be our focus states, while still maintaining a significant balance in the existing geographies which Spandana had already. So Spandana was essentially spread in Orissa, Maharashtra, and down south. That was where it was mostly concentrated. So we came out with that plan for the next 3 years. And if I draw you a chart of FY25, we will have, at this point in time, our largest state is Madhya Pradesh at 15%. If I draw you a chart of end of FY25, we will be very well spread across 19 states, number one. Number two, the largest state will be about 11%, 11.5%. So that's how we've planned. We are trying to mitigate the geographical risk so that, we grow in a very secular manner across the country.
Okay.
Shalabh, since you point out that there's been a change in management, would you highlight the 2 or 3 changes that shareholders might expect in terms of positive outcomes over the next 1 or 2 years?
So Shell, one of the things, it's a point of view on what is right or what is wrong. So as far as we are concerned, when we took over, there were few practices which we've reinforced. People practice, attracting talent, number 2, focusing on technology from a security, stability, and scalability point of view, number 3. Number 4, geographical expansion to ensure the concentration risk is mitigated, number 4. Number 5, and which is the most important thing, is focus on customer acquisition instead of the ticket sizes. Now, this is a bit of a contradictory, position from typically how one would expect a growth from a lender point of view would come from. As far as we are concerned, what we are focused on is we will acquire more and more customers. We will be muted on ticket sizes. So our ticket sizes we will not increase, because that's what in our belief a microfinance should be. You should always be slightly muted on ticket sizes, acquire more and more customers. The market, in our view, is still under-penetrated. The addressable market, it's still about 48, 49%, 50% penetrated. So you still have a lot of headroom available. So acquire more customers. These are the 5 things that we started with. We are progressing well. We are now 6 quarters already into the plan, another 6 quarters to go. I mean, I would stick my neck out and say that, we are very well on track.
Okay, very well on track. I'll get back to all the, expansion plans and on the financials as well. But if you could give us any color, we've just seen Spandana Spurti, a block deal happen on the exchanges today. 5.5% equity has exchanged hands. Could you give us more details on this, if you have any details of who are the buyers and sellers in this?
I also saw what you saw, and I also know that so it's only end of the day is when we'll know the position. At this point in time, obviously, I can't comment on that.
Okay, sir. And that's why you can actually see a slight decline on the stock, about 2.5% down on the stock. But Mr. Saxena, talking about your asset quality, that has shown a considerable amount of improvement. It did, the gross NPAs have now fallen to 1.6% at the end of the June quarter from 2.07% 3 months prior to this. The net NPA now stands at 0.5%. Do you think there is scope to further improve the asset quality? What is the guidance that you'd like to give here?
So, Sakshi, one of the critical things in a microfinance is that you have to have a complete control over the quality that you source. And that's exactly what we did over the past 5 quarters. And that's the reason the numbers that you've just quoted, that's how it has kind of progressed. Although our financials, in all our financials, we've baked a credit loss of about 2%. I think the current trends over the past 4 or 5 quarters on the business that we have sourced is much lower. However, from a P&L and a guidance point of view, we still are baking in 2% credit loss in our financials, and that's how we are taking it. I'd be surprised if we hit that number, but then on a long-term basis, so there could be a few blips here and there, but broadly, that's the range that one should look at.
Right. We have some more details as far as that block is concerned. Obviously, the sellers' visibility is not there at the moment, but the size of the block was 283 crore rupees. About 36 lakh 76,000 shares have changed hands at an average price of 772 on Spandana Sphoorti, and we know that the previous management has indicated its intention to keep on selling, divesting its existing holdings. So one presumes that this kind of liquidity is coming from that quarter only. Shalabh, taking the discussion forward, what has been the average ticket size of your loan in the past quarter, and is there a certain geography apart from Madhya Pradesh where you are seeing more demand coming in year on year in the past quarter compared with the year ago number?
So, Shell, two questions. I'll answer the last one first. The demand is secular across all the states. That's that's the headline. The reasons are as follows. One, there's a pent-up demand for the last 2 years when the COVID kind of took over, and this is the segment which is the most vulnerable segment, and hence they do take time. They evaluate the position and then they take some time to kind of get back. So so that's reason number one. Reason number two is the country has seen a lot of investment from the government side into the Bharat of India, into the rural India. So what has happened is that so much of infrastructure expansion and money flowing into the rural India has increased the income levels of our customers. Spandana Sphoorti is a 90% rural distribution company. So, we really cater to the deepest of Bharat, as I call it. So, so that is one of the strong reasons why we see a consistent and a reasonably robust demand that comes out of our segment. So that's number one. Number two, to your question on the ticket size, we kind of monitor it slightly differently. In our view, one should look at the indebtedness level of a customer, because that's very critical. A ticket size is a factor of the policy of the company. A particular company could give 4 loans in 2 years. Another company could give 1 loan only in 2 years. So, hence there is that nuance. As far as we are concerned, our average indebtedness at a customer level is around 34,000. Going back to the point I was making early in the narrative, you will see this coming down over the quarters because we are focusing on acquiring more customers and less on the ticket size or the loan amount. So that's our philosophy that is very much deeply ingrained. There's one more thing that we've done, which is microfinance also operates various repayment models from a payment perspective. There are companies which operate on the monthly repayment. There are companies which operate on the weekly repayment. So Spandana Sphoorti, when we took over, was a monthly repayment company. Over the past 5 quarters, we've worked hard to ensure that we are going towards the weekly way. Out of the 1,200, 1,300 odd branches, about 200 branches are already weekly, and we have a phase-wise plan to kind of convert the company from a monthly into a weekly for various reasons, which it's a longish answer, but broadly speaking, that is what we are doing. So you will see Spandana muted on ticket sizes, more on customer acquisition and declining indebtedness level at a customer from a customer point of view.
Right. Thank you so much, Shalabh, for your time. And we wish you all the best for the coming 4 or 5 quarters. Of course, the stock is now available at the IPO price where it started somewhere in August 2019. So life comes to a full circle, and with the new management at the helm, I'm sure good and better things are there in the offing as far as Spandana Sphoorti is concerned. More power and more Sphoorti to you. in the coming quarters. Thank you so much for your time.
Thank you, Shahil. Thank you, Sakshi. Thank you very much.
If you like the video, do like, comment, share and subscribe.